Courtney Dominguez is joining us, wealth advisor at Payne Capital Management. The market is trying to find some direction today, right? We have that back and forth, but we've had the rallies. We've seen the records. We have winners today. Disney, United Health, Walmart, Procter & Gamble are among the winners on the Dow Jones Industrial Average. What are your feelings at this time?
Yeah, I think investors really should be looking forward as to what the fundamentals are showing, which are still really strong, and they have been most of the year. And today they have been up and down. I think everyone's really waiting to see how the trade deals play out.
Right.
But at the end of the day, fundamentals are still good. There's a lot of cash on the sidelines right now because investors have been so nervous with trade wars and impeachment and all the other headlines that are out there. We are finally starting to see this go back in. And I think if there's any dips or nervousness or flat days, it's just something to take advantage of.
Yeah, and it'll be interesting to see, as people are trying to do some window dressing, if they even put that cash to work and sort of, because we're wrapping it up soon. And we'll see whether or not they start to put them in some of the more favorable sectors. There's still people talking about Santa Claus rally. We had a guest on late October who said, don't forget the Santa Claus rally. We've been rallying ever since he came on.
It's true.
The question is, I wonder if this is the rally already. Does it continue? I mean, what is the feeling going forward, now through the end of the year? Is it take money off the table or ride the wave?
I think the opposite. Yeah, I think you actually are over the last 2 weeks, you finally started to see cash balances go down for the first time since Trump was elected, whereas people have just been hoarding cash this whole time. So you're finally starting to see that reversal. So what's happening is it's that fear of missing out, or FOMO, as we like to call it, where markets are hitting all new highs. People have the most cash they've ever had on record, and they're finally saying, well, why am I sitting here getting no interest when I could be hitting these all-time highs with everyone else? You're finally starting to see that happen, but there's a lot of room to still go.
Every person you talk to, they say, well, it's going to have a pullback. The pullback, recession, those have a big difference. A pullback and a recession are two big stories. Do you think either are coming? It's hard to know.
I'm not one of the doomsayers who says a recession is right around the corner. I think really fundamentals are still strong. We actually have an accommodative Fed right now. The consumer is still really strong. It looks like trade wars are hopefully going to get resolved or at least have some sort of a resolution here, which are all really positive things for the market. And those are really reducing a lot of the recession fears, which is great.
Some of the there's value versus growth. So you've been looking at value a lot lately, right?
Very much so.
Why?
Well, growth has just been outperforming really the last decade. It's Apple and Google and Microsoft, all those big brand name companies have been doing absolutely fantastic. And you're just getting people continuing to want to put money there. And so it's not that value's been underperforming, but if you compare it to growth, it's not nearly had as much of a trajectory. And you're starting to see, again, people want to put more money in those things that are doing well, which is kind of counterintuitive. So value is only getting more valuable. And it's a good place, I think, to add some money to.
Are there certain sectors that you like more than others? People are talking about what to invest in for 2020. I've heard pretty much invest in everything except energy. I mean, I don't know. Are there certain areas that you think may do better fundamentally?
You definitely need to stay broadly diversified. There's nothing I would get out of by any means. I am bullish on the global markets. But yes, any new money we're adding to value over growth and even small companies over your large companies.
Really?
I'd also agree that foreign companies I still think are pretty undervalued right now. And you are starting to see their performance come back. But they're definitely an underloved sector. And I think adding some more there can be helpful.
So we'll watch like the Russell 2000 and for emerging markets. Is that what you're talking about? Or what are you talking about?
Emerging markets and developed markets. I think both of those have some good potential going forward, especially with all the trade wars over the last year. No one has wanted to have to do a lot with foreign investing.
Right.
But I do think it has a lot of potential going forward. And again, I think it's been an overly sold sector, more so than I think the fundamentals.
Are you hearing more about good things about China or Japan or Europe or Latin America? I mean, is there certain areas that you like more than others in those groups?
Whenever I'm going over these sectors, I want to own the entire thing. So I like the Vanguard emerging markets and Vanguard developed markets. It's a good way of owning the entire sectors as a whole.
Right.
Because it can be a dangerous game choosing one company, as we've seen with trade wars. Yes, that can affect China, but that's actually helped other surrounding countries. So if you own the whole broad market, you're not going to get hit quite as hard.
So you're focusing on a nice, strong consumer, some earnings that weren't as bad as expected, markets at record highs, the impeachment stuff and politics, you're not even really looking at that, right?
No, I would really try to ignore that as much as you can for a couple of reasons. Number one, it's still way too soon to know what's going to happen with the impeachment. But B, the last impeachment that happened was with Clinton, and that was also in a strong economy with an accommodative Fed at the time, and the markets and economy continue to do strong despite that impeachment. So regardless of what happens, I don't think it necessarily means anything bad for the market.
And with the Senate, I mean, it's sort of unlikely, I guess, but no one really knows.
Yeah.
And then 2020, we go into an election. Does it worry you to be in an election year?
Not at all. I think if anything, it leads to some short-term movements, whether that's negative or positive, depending on who's elected or who's a front runner.
Right.
That can lead to some short-term movements, but those are always more knee-jerk reactions. And if you see a negative reaction, take that as a buying opportunity. It's never a long-term effect on the stock market.
Oh, okay. That's good to know too. Great to see you, Courtney.
Thanks for having
me.
me, as
much
always.
For being with us. Courtney Dominguez, wealth advisor at Payne Capital Management.